All right, we're doing a quick back test here. This is Monday, the first AM macro. We're doing this live on a live call and showing people what was up for the week. So here you got Monday. It took out the high up here at 4 or 5 o'clock in the morning and then just started going down on this downtrend here. And then the open happened right here. So we'll put the macro in there, right? Just so everyone can see it. This is definitely where I cheat by 2-3 minutes, is right in here. So you have this continuation model. It already took the high out. That's the rule. You have this displacement right here over this breaker block right here. It's the lowest candle here, displaces over it, comes back in right here, 2 minutes before macro. 3 is where I push it the most. You just have to sometime right here. Stop placement's huge on this one, so I want to get it above this breaker block right here. So you have a 36-point stop. The first low right here to your target, and you crush 89 points. Your target is over here on the 15-minute. I don't know if you can see it on the 1 minute. I'll show you your target. Whoa, that's messy. Sorry. That was Monday. Easy target right here. That's your first target. See it? Or sorry, right here. On the 15-minute, there was nothing else. You have your high, your low, your high, your low, your high, your low right here. That's your target. Crushes 88 points. I have it recorded 88 for the day, right? That is the continuation model. That one's money because it's the first fair value gap that presents itself of the day. It's just continuation displacement, first fair value gap that presents itself. Basically, that's it in a nutshell. So here we go on a Tuesday. Now, there was this big news push, right? And it was positive for the indices. So this teal line here, Sean,
yeah,
everybody, this is the discount range of the daily previous range. Now pay attention how this comes down and just wicks it right here. Just wicks. And what it's also doing, okay, it swept the discount here, but it also took the open out right here. So you have it marked right here. That's the open low right here. So we had conflicting bias. FEG was more bearish. So the bias was more bearish as according to the fair value gaps, but this and the swept made me change my bias, which you can do because it looked like the 1 hour, the 4 hour that we're trading in was going to invert it. We're trading above it. I can go look at that too for Tuesday. We'll just do that because I was a bit confused by the bias that morning as well, but the sweeps of liquidity changed my mind. So here's Monday, and here's that trade that we're talking about on Tuesday. So we're looking at getting in right here, but we're trading in this bearish fair value gap right here. Like technically you have to assume that it's still in it until the candle closes. But to me, by the time I want to get an entry, it looked like it was going to invert it, right? It didn't invert it because you have to wait for that candle to close first, right? If everybody can see that, this one here, it was obvious that it was inverting it to me. I know it could have pulled back and not, but then it had a bearish fair value gap bias confirmation on your bias. But then like my bias instantly changed whenever I saw, because I always, okay, so like when you see it wick the discount like that, it's ready to go. Okay, so what we have our rules though, it's swept the open, right? So then you get this low, this high here, and it fails to make a lower low here, right? So this is your, what is it called? Mitigation block right there. It's not, it's only would be a breaker if that made a lower low here.
Oh, yeah.
And it doesn't.
Mitigation.
Yeah, mitigation. It doesn't really make a difference really, but it's still technically, it's a market structure shift here. And then of course you have your fair value gap bullish that's paired right in here. See?
Yeah.
So it's paired. You have a fair value gap in this mitigation block.
Yeah.
That's all you're looking for. So like you have a sweep of liquidity, rules are there. A little bit off on the confirmation, but it looks like we're going to invert it. So I got in right here and my stop was right about here, 32. Kind of sucked. I didn't want to put it to 37. So I went with my max 32. I know that I'll pay attention to this as well. I'm below the mitigation block on my stop loss. See, at 32. So that's where it will wick back to, is deep into this block here. So if you can't get it to the bottom of the fair value gap, like it's just get it to the bottom of the bearish of the mitigation block or the breaker block right here though. You know what I mean by that?
Yeah.
So here you got a 32-point stop. and then you crush 73 points on this high right here, or
Yeah.
260. So I recorded it as Tuesday, 73 points to structure. This just clean goes clean, right? So then I don't have any trades again after that, I don't think, because I think I marked a few things in. We go up, and here's a fake Fugazi sell here or something, maybe. Draw liquidities here. That's why I have it marked in. See? Comes up, it doesn't give you anything all day. So Wednesday morning, it shoots out at the gate. No trade here, no bueno. And then it just keeps going, and we start trading above the daily high. I forget where. Okay. Now this is a good trade here I took. So, or did I take this? No, oh, I did. Yeah, I got break even here. So this teal line is not the 50% of the daily range. It's 50% of this range here. See?
Okay.
So that's actually liquidity, the 50% mark. You can consider it that when it's bullish. So it's trading above the daily high. Not interested on this sell here. I have an arrow pointing Y. So it came all the way up. The draw on liquidity is here at this external high there. So I'm not looking for a sell. It's bullish. That's where I believe the draw on liquidity is up here. So I don't get into a sell. It did not sweep liquidity here. So then I saw this right here in a macro. What macro is it? I don't know. 745, I guess, right here. So we have this beautiful displacement here. Made a low, displaced with a breaker here, just displaces. Here's the breaker block here, displaces. And then I have this arrow here, but you wouldn't take it here because you have an invalid stop in here, right? Like, so what you would want to do is put a GAN block like that. And if it came to 50%, you could go like, put your stop loss down here at 31 points. See how I'm reasoning this? Now you get a valid stop, but market never does. So I did not take it there because I had an invalid stop placement in here. Hope that makes sense. Next thing we did is we came up and we displaced once more, and I did grab it right here, and I put my stop loss right here at 30 points. Okay. So I got in right here because this is displacing over this right here. See it?
Yeah.
Low, temporary high, temporary low, temporary high. Displaces over it here. I got in right here, came up to here, paid out 41 to here, and I just left everything alone. I was at break even though, of course, right?
Yeah.
And it came down, hit my break even here, so 0 for the day here. It's just like it is what it is. Nothing I could have done better. Nothing I could have done worse. Except here's another trade right here. Now this is a money trade that you have to pay attention to. That's why using this tool of the lunch low, make sure you know where your lunch low is. Now in this range, it comes down, it sweeps the lunch low. That's the lunch low right there. See the time? Or right here too. See? That's the lunch right here. The lunch low is right here. Sweeps the lunch low. Now, we have a form of liquidity swept, but it's like, you know, it's a session, and we're trading in a fair value gap on the 15-minute and the 5-minute. So we have that confirmation. Now, you have to have a sweep of liquidity in a session. You have to. Now, this is the lunch macro, and you can only trade it if there's news that day. And then Trump was speaking, so it's legit. I took it. I don't trade without. So here you actually have a market structure shift. Can you see that? Right here. All the highs were getting lower until right here. And then it made a new low. So that's actually a breaker block. And it shifted over it.
Yeah.
You understand that?
And left an FVG.
Yeah, because it made a new low right here. And that's the high.
Yeah.
Okay. All you do is look for your break of character on this side. People are confused. For new people, Sean gets it. He's been doing it for a long time. But like everybody else, just look for a break of character there. And it shifted through it. It just didn't come back here. And this is where the supernova can be money. You got your big consecutive push up, which is very impulsive move up. You got this inverted fair value gap as confluence. You don't have to have this. You don't need to have inverted, but we got a swept the lunch lows. We have a fair value gap that supports it bullish on this side for our confirmation. We're trading above the daily high, daily low. We're looking for a buy. Here's your supernova entry, 1, 2, 3 impulsive, crosses over the 50, 17-point stop under the low, maybe even 18, somewhere in there. Target the immediate high. that gives you 1 to 2 ratio. So right here at 33, you're jamming to break even. So when this price, came up into here, it came back down into here. And as soon as it broke this high right here, your stop loss went to the low right here, the immediate low. See it?
Yeah.
Broke that high. So now you're trading with a 3-point stop loss. Then it breaks this high right here, but you can't get out here because it doesn't give you a 1 to 2. So now the immediate to the left, you look to the left, which is right here. As soon as it breaks that high or that high, you go to break even.
Yeah.
But you're also over half of your 50% of your trade right here as well. So if you're looking for 60 points, your target, 50%, right? So then you target the immediate high that gives you a 1 to 2. So you could go there, get your 1 to 2, and you can put your stop loss at 50 points there. Yeah. So recorded Wednesday 1 to 2 or 87 points. It's 87 points to the high. 88, 87. Call it 87. So we got Monday 88 points. We got Tuesday 73 points to structure, and Wednesday 87 points to structure. And this is all in macro. None of this is outside of a macro. None of this is like all the rules are there. It swept the liquidity, blah, 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 blah. Now here's a trade that I took and I made a video on YouTube. So this swept the 15-minute low, and it happened to be a previous PM session low. So you want to watch for that. Like, it's really good to use this tool. I have this turned on in the morning. Always have this on in the morning. So there's New York PM previous day, and there's the low right there. Do you see it? Session low right here. Plus you had this run up, and then you had an internal sweep here. Turn this off because it's really super busy. Go back to Thursday's trade. One rule before we get started with anything: was there a sweep of liquidity? Yes or no? What was our bias? Are we trading in the high time fair value gap? All that stuff. We swept the 15-minute low of a session. That's the first rule. We're in this bullish gap here, so we have a bullish bias. You'd actually confirm your bias first, sorry. Then the second rule is a sweep of a session, right? You do.
Hmm?
Now, what's the next rule? We need a market structure shift, which you have here. I'll mark that in right here. So you have to have a market structure shift. It has to either displace or a mitigation block or a breaker block. So you have it here, right? I'll draw it in. Okay, I saw that fair value gap. I was like, doesn't come back to it, right? So it displaces here over this mitigation block. I took it in here, got stopped out here, and I took it right when it crossed over the 50 right here. Target my next high, immediate high right here, 57 points. I went to a 1 to 2, whatever it was. My stop placement was right below the candle wick, 30 points. And there's my 30 points for the day. So here's another valid trade right here, because this is a 1 hour bearish fair value gap right here. Here's the bearish gap here, 1 hour. So we have a 1 hour high time frame fair value gap. So the rules are, it's not sweeping a session here, but it clears the high of the day. So you have a market structure shift on the downside. So that's the high of the day right here. And then it comes up and clears the high of the day, which wouldn't to me be enough, but it is in a high time frame fair value gap. So I have it right here. It clears the high of the day. So basically this is a minor buy side liquidity. It swept minor buy side liquidity here in a macro in a high time frame. Does that make sense? Because we need a clear liquidity, and a minor is not enough unless it's in a fair value gap, if that makes sense. This is the second AM macro from here to right here, right? Now check this out. It comes down. This does not displace over anything, okay? This is the mitigation block here, or the breaker block here, or the mitigation block, sorry, because that high failed to make a new high, correct? Mitigation block, it comes here, it runs through it, so now you have a market structure shift. That's all you have. Now, it comes back in, taps into the breaker on the breaker, and that's actually a legit entry. However, I don't take those entries. I see them all the time. I just don't do it. It's not training my model. I'm looking for a fair value gap inside this. Does that make sense? Right. But it comes down, it breaks. So you have a market structure shift now. So you can start looking for a sell. We have our clear high of the day. We were in a high time frame fair value gap, bearish, market structure shift. Here's the macro here. Now here it displaces here, and that's your entry here.
Okay, so, go back to that where it first broke the market structure. Black candle, yeah. That one there.
Yeah.
Okay, there's a tiny little FEG in that candle.
Oh, there is right there.
Yeah.
Good. Oh, I think I looked at that and I couldn't get. Are you sure? Look.
Yeah, it's kind of hard to tell. So
No, I don't think it is. I think I looked at that. Look at that. Oh, I
It's
mean,
like a sliver.
but this is obviously a better entry, but here it displaces here, and you have a
Mhm.
chunk of the fair value gap in this breaker here. See it? A chunk of it
Yeah, yeah.
was valid. Right here is valid. And you only have a 16-point stop running on this one, right? And then this one collapses to your low right here, 60 points right here. Okay, so I have Tuesday marked as 30 points at 2 contracts, so it's like 60. I'm marking at 60. We're not going to mark that. You don't trade twice ever. Just showing you a wicked opportunity. Friday is just trash anyway, so like I didn't even take a trade on Friday, so it doesn't really matter.